Hello, my name is Eric Martel, and welcome back to another episode of Break Away from the Rat Race. And today I want to talk to accidental investors who want to become goal-driven investor. Basically, an accidental investor is someone that inherited a property or a house and decided to rent it out, or an apartment building, or they transferred out of an area and decide to keep their previous house, try to rent it out. Basically, someone who inherited a piece of property and decided to, just because they had it by default, they decided that, hey, why don't I rent it out? Anything wrong with that? Maybe not. There's nothing really wrong with that. But what I recommend that you do is make sure that this property is aligned with your goal. And this is how you're going to become a goal-driven investor. So if we go back to the strategy tool that I introduced in a previous episode, you basically end up with this the strategy triangle, the strategy, market, and resources. And that piece of property fits where? Well, it fits in the resources because it has equity, and it's also providing some cash flow, hopefully positive cash flow. So this is where we are here. And the accidental investor basically has that resources, but doesn't have the goals associated with it, doesn't really think about a strategy for reaching that goal, and then it basically ends up with that piece of property that's kind of in the bottom corner here, and you hope for the best. So to become a goal-driven investor, the first thing that you have to look for is kind of identify your goal. Really, what do you want to do? If you haven't achieved financial freedom, if your passive income are not above your current expense level, then this should be your first goal. Everybody's goal number one is to achieve financial freedom. Then after that, you can look at strategies. And we're in real estate rentals, so your strategy here should be about having rental properties that are cash flowing, right? And then helping you basically achieve your goal. Now, the next thing that you want to look at is then that property. Does that fit in that property? Does that property fit into your strategy, right? So because having this property also kind of defaults you for a specific market. So then you want to look at, is there something that you can do in here, change your position maybe, and try to identify, maybe there's a different market that would work better, that would make my strategy better. It doesn't have to be done now, but maybe this is something that you want to look at. And the way to look at that is to look at that resource, that property, and identify how much equity is available on that property. And then you want to measure how well this equity is performing. And so you measure that with the return on equity. You basically take your net cash flow, your annual net cash flow, and you divide it by your equity. That's going to give you a return on equity. If that return on equity is less than inflation, then it's not ideal. You want to have something that at least meets inflation and hopefully more than double the inflation. If you're not in that situation, then you may want to consider leveraging that equity, taking a line of credit or something like that to invest in something else. You may also consider selling that piece of property to find another property that would meet that would have a higher return on equity. That would help you achieve your strategy, enable your strategy be stronger, and then achieve your goal faster. So if you do this, once you have your goal and strategy in place, and you can really look at how your property fits into this strategy and this goal, then you become automatically a goal-driven investor. So there we go. So it's pretty simple. If you have any questions, comments, feel free to contact me, and be happy to help you. Have a good day. Take care.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.